What is up, everyone? Welcome back to the trading world. If you guys are new to my channel, my name is Jake. I cover the market every single day, covering all kinds of real trades that you can take on the market. No fluff, no overcomplications, just simply me to you telling you trades that you can take throughout the day. I cover trades from people all across Twitter, as well as trades that I notice throughout the day. So if you like the type of content, definitely consider subscribing, leaving a like, and checking out my completely free Discord. The link to that is in my bio. Guys, today was actually a pretty good day for trades. We got a lot of opportunity, starting with this trade from Doji. So, I didn't actually notice this in the moment. Don't ask me how, but in hindsight, it's very, very obvious. You have this 30-second gap that gets closed above. And so I marked this out in my back testing. And this is nice because you can see this is an obvious, huge accumulation range. And so you guys, if you guys don't know, you want to target these accumulation ranges. So this is how I have it marked out. We have this giant 30-second gap. We pop below this low, and then we get this close above. You can go break even right away. You don't have to worry too much about this gap because we can go break even here. And then we aggressively expand up towards market open. And all the people that were entered in here are going to get stopped out for a loss at these highs, at these equal highs. So enter on this inverse fair value gap, stop loss at the low. I just put it here. Let's see where Doji put it. Yeah, it's around the same area. And then yeah, the rest was history. We went right up from there. But let's also talk about the market in general. So I had the complete right idea going into the market, which was I had this energetic move out from here to here. Oh, I think it was, yeah, from here to here, marked out, premium to discount. And I actually really was looking at this fair value gap here in discount, either one of these. And I was looking at this, and I actually tried to take a trade using this. Now I'm going to tell you exactly what happened and how I would improve it. But it was actually a really good trade. So we have this 1 hour fair value gap within discount. So I'm going to mark this out here, 1 hour fair value gap. And then we get SMT with this low. So that's when one asset makes a lower low. So here you can see NASDAQ makes a lower low and the S&P makes a higher low. So there's a cracking correlation between two assets. So that's your SMT. And so to frame a model, you need a higher time frame key level, so 1 hour gap here. And then you need an aligned time frame change state of delivery. So I had this marked out. Oh, and you need a liquidity sweep. So we swept out all these lows here. So I actually tried to execute this trade, and I'll show you what I would do differently. So we swept out this low. We got this change state of delivery. And you can see how perfectly we react off of it later on, right? That's pretty cool. But the way you would do this is you would enter on the retest of it. You could put the stop loss at the end of the bodies here or at the wick, either one. And then you can target, you can probably just target the first standard deviation. So see how we go perfectly to that first standard deviation. And that would be a very nice 1-to-1. So I tried to take this trade, and this was completely a good trade, but I tried to enter on the close, and my reflection on that is there was no reason for me to need to enter on the close, because you really only want to enter on the close when it's super, super obvious that we're ready to go run liquidity, and we close in this gap. So it's not that obvious that we're ready to go run liquidity. So I think if I was to redo this, I would enter on the retest. So we have a sweep with SMT with this 1 hour for value gap and discount. We also actually have two SMTs, by the way. We have SMT with this low as well. And then here is that aligned time frame changes state of delivery on the 5 minute. And then you'd enter once we retest this. And then you could, if you have your stop loss here, I like to put my stop loss at the same exact spot that I'm measuring the standard deviations. So if I'm using the body to measure out the standard deviations, then I'll have my stop loss at the end of the body. So you can see that we went right here, and you could take this trade like that. First standard deviation, boom, hit. So yeah, I did try and take this live. I kind of messed it up, but that's why I'm reflecting. That's why I'm journaling. And I should have entered on the retest, not the close here. So that's my big lesson learned. And honestly, I don't think you should really go break even on flow state until you hit that 1R. I think that's usually a pretty good break even spot anyway. And so then we hit the second standard deviation as well. So you can see if you held a runner up there, that would be 2 to 1, right? And you can see how the market refers back to this point later on, actually. You can see how 5 minute change state delivery, the market still refers back to it. We get inducement below this low here. So if you don't know what that is, it's when you have a key level sitting right below an old low. So this would be a turtle soup, right? So that's when you have, that's when you anticipate that's when you buy below an old low is essentially what it is, or sell above an old high. I actually need to make a video on that. So here we go. You can see we go right up to that second standard deviation. So this was kind of like the higher time frame model for the day. I just wanted to start out talking about this, right? But clearly you can see this is a giant buy model here where you have accumulation, and then manipulation, and then we get the distribution. So always be thinking in terms of accumulation, manipulation, and distribution. That is key. But yeah, you can see how perfect this model is. Very, very cool. I could see us continuing to go to that fourth standard deviation. Let's talk about another trade from someone else, so I don't just get tunnel vision here. So we have wow, nothing's loading. So in the meantime, I'm actually just going to I'm just going to review another trade that I took note of. So I noticed that you could have possibly tried to take a lower time frame inversion down here, right? We had this 1 minute gap and we closed above, and you can go watch the live stream. I said this on live where once we inverse this gap, I was like, we're probably going to continue to go run this high, this market open high. I said this live. You can go watch it. I said if we inverse this, we're probably going to go around this high. I did not take this personally because there's a 2 minute external gap, and I would have wanted to see the 2 minute inverse. And by then, we close too high for me to want to enter. But, if you have conviction in the draw and liquidity, these are kinds of trades you can take. You just have to be prepared to accept the loss because you're front running this 2 minute gap, because you want to wait for the highest time frame gap to inverse. And so if you take this, you can. It's just you got to have good conviction that we're going to go run those highs right away. So, but if you took this, good job. Another trade that was a flow state that I really liked was we had a 15-minute fair value gap in discount right here. So 15-minute fair value gap in discount. And once again, we still have that same SMT from before. And here's that 15-minute fair value gap. And I believe, actually, Haney took this from my Discord. So I'm going to pull that up real quick. So this might take a second. But basically, we have SMT with this 15-minute fair value gap. We get a sweep of this low. And higher time frame is bullish, right? So we essentially were looking for longs throughout the day because we know the market's probably not going to prefer shorts right now. And so 15-minute fair value gap here, sweep. And essentially, now, so this is external sweep, and then also we get internal sweep right here. So we sweep out two different kinds of liquidity, and then we get a change in state of delivery on the 1 minute right here. So 1 minute change in state of delivery. And guys, I really liked this, but I think I was a little confused when this happened. I didn't have my gap marked out, and I was a little delayed on like realizing what was going on. Otherwise, I think I would have taken this, and I probably should have. But when we get this close, you can enter right on that close on the 1 minute. So 1 minute change state of delivery. And then if I measure out standard deviations of this move down, you can see we go right up to that second standard deviation. And then as well, we end up going right up to that fourth standard deviation perfectly. Do you see that? You see how perfect that is? Right up to that fourth standard deviation perfectly. And once again, guys, I just try and go, I always take half off at 1R. So I would have taken half off at 1R here. Now, when I enter on a close, I will make the stop loss a little bit more aggressive a lot of the time. And yeah, 1 minute change state of delivery. We go to that first standard deviation. And then maybe you would leave a runner for the second standard deviation. But I do think that it's cool because you can clearly see the market runs on this, right? Because look how perfectly we respond to this fourth standard deviation here. So SMT, this 15-minute gap, 1 minute change state of delivery where we get a candle body close above this old up close candle. You see that? Candle body. Now, maybe you could consider this the change state of delivery. To me, I don't know if that's obvious enough, but if that's obvious enough for you, maybe you could. It looks like they're around equal, so I probably would have waited for this one. And then the rest is history, right? We go and run right up to that fourth standard deviation perfectly. So that was really, really cool. Let's review a trade from someone else on Twitter. So here's trades from Hydra. Okay, so he takes this 1 minute inversion that I was talking about, and that 1 minute inversion is nice. There's nothing wrong with this, because if you have conviction that we're ready to go run liquidity, then you don't really need to wait for that 2 minute gap. But a lot of the time, I like to play it extra safe and just wait for the highest time frame gap to get inversed, because I don't like to take losses personally. I really hate taking losses, and a lot of the time, if you don't wait for the highest time frame gap to get inverse, then a lot of time you could mess up. But I don't know why he enters before the close, but you can see this was the trade, right? So same thing as what we talked about before. Good trade from Hydra. And then this was at market open. We had SMT during 9:20 to 9:40, which if you don't know, that 20-minute time span between 9:20 and 9:40, that's the macro that Hydra uses. So there's the regular macros from the 50 until 10 of every day, but then Hydra claims that there's another and I've seen it and I believe it personally, that there's another macro between 20 and 40. And so basically there's two macros every hour between 50 and 10 and 20 and 40. So look for your trades during those times. But we inverse this gap here and we aggressively expand to the downside. Let's take a look at that. So this isn't one that I would take. It's a little too shaky price action for me. I don't like the aggressive wick up, down, up, and then close here. For me, that's just, it's not obvious enough to me. So I probably would not take this, but Hydra takes this, and we end up running down to, oh, I guess all the way down to this accumulation here. So yeah, you could, I always just try and take half off at 1R, and then you could leave a runner for 1.5 or 2R or whatever. So yeah, good trade from Hydra. Let's see, let's talk about another trade that I noticed. So, let's talk about the mistake I made. So I messed up today, guys. I took a trade thinking that this was a 5-minute fair value gap right here. I thought this was a 5-minute gap. I don't know why, but it wasn't. But if this was a 5-minute gap, I was going to enter. I like this 30-second change of state of delivery. So I tried to, we'll go watch the live stream. I tried to enter this where we have a 30-second change of state of delivery and 5-minute gap. So 5-minute aligns with the 30-second. And once again, I like this. This will load. Because you can also go break even right here. But there's not actually a 5-minute gap here. But what's cool is what I was wrong about is actually, well, first of all, we go perfectly hit the first standard deviation and then the second standard deviation. I think that's cool. But what I was wrong about is there's not a fair value gap, but there was a key level that I could have used, and that was this highest up close candle here. This is a 5-minute breaker. And the reason this is a good key level you could use for flow state is because it's the highest up close candle before this aggressive move down that takes out all this liquidity. So this breaker is a higher probability breaker. So 5-minute breaker right here. And going down to 30-second. And now all of a sudden, okay, now this actually does work as a flow state. Now I would probably just do stop loss at the low. But once again, guys, I was just being extra cautious. And I think the other reason I liked this was because there was SMT. Yeah, you can see there was SMT with this low here. So SMT, that's the other reason I like this. So we get SMT, so 5-minute breaker, and then 30-second change of state of delivery, and then you could go break even here, or you don't have to. You could go break even once we hit this first standard deviation. And then we continue higher. Sorry, I'm in the middle of recording a video.
Oh, I want to go to dinner later. Let me know.
Okay. So 30-second change of state of delivery. And then you can see we continue up to that second standard deviation. let's look at another trade from someone else. So there was this trade from Trader Diego. And it's a relatively simple trade. Just sweep inversion of this gap, and then he entered on a little bit of a retrace. So sweep, inversion, and then just targeting 1.5. And you can see that that happens. Where does that happen? That happens right here, where we get sweep, sweep, inversion. Now you could enter on the, I usually try and enter on the close, but I mean, the model, as long as the model's still valid, you can enter on a little bit of a retrace. So boom, you know, there. And this was actually really good RR, actually. Probably. But yeah. Just a little bit of a retrace. And this is just a very light bulb signature. And when you have a trend line of highs like this, it's like, yeah, we're usually always gonna go run that trend line. So that was that was probably like a 2.3 to 1. But yeah, when we get this aggressive V shape and we have highs like this, we're always gonna run up to those. Now the reason we didn't continue higher is because this is kind of where the highs end, and then you have almost like, this is probably like a 2-minute gap. Yeah, like a 2-minute gap in here. Not exactly, but you can tell that's where the highs end, right? So anyway, good trade from Diego. And what else? Oh, another thing to note is, right, we sweep out all these lows. So this is your 2022 model where, well, also check this out. We manipulate below midnight. So remember, you want to see your manipulation go below midnight, and you want to see manipulation go below 8:30 and 9:30. So you can see the manipulation, if we're bullish, is going to go below midnight, and the manipulation when we're bullish for New York session is going to go below 8:30. So you can see how these were both the manipulation. So this helps you point which way the market's manipulating. If the market manipulates and dips below midnight and then goes higher, it's like, okay, that was probably the manipulation. If the market manipulates and goes below 8:30 and then continues higher, it's like, okay, that was probably the manipulation. So you can see that using these time levels is very helpful. And then as well, let's see. Oh, the other thing I was going to talk about was, this is essentially a 2022 model where we get a liquidity sweep, break of this high, right? We have a high here, we break above it. So liquidity sweep, break of structure, and then we have a 5-minute fair value gap here. And if you just put the stop loss at the end of the fair value gap, you can see that we continue up for the rest of the day. So this is, yeah, pretty cool how the market moves like this. Do you guys see how perfect this is, right? So liquidity sweep, break of structure, fair value gap, and then we expand the rest of the day. Take profit wherever you want. Literally, you have a ton of options. But like I said, I always try and take half off at 1R. And then I try and maybe leave a runner for in between 1 and 2R. That's my own personal trading style. You know, if you like more than that, you can do you. But for me, I just want to just make money. So anyway, we test that and we continue higher up to this high. And yeah, I've been talking for a while. I just have a little bit more. So here you can see Jade Cap. So this is the guy that got the $2 million payout from Apex. He's showing, look at that midnight. We manipulate below midnight with SMT. So he's like, okay, so that's probably the manipulation. If we got a dip below midnight with SMT, that's probably the manipulation. And then he marks out that this is the change of state delivery. This is the fair value gap. And so he enters. You can see he enters within here somewhere. But he just, I don't know his entry, but it's pretty clear that he figured out this was the manipulation because we get SMT below midnight, and then we get the fair value gap, and then we expand the rest of the day. I can't tell you exactly how he entered, but he probably just entered on like change state delivery in here or an inverse fair value gap. I don't really know. So, wow, what else? We have this trade from Camel. I think, what is this? Wasn't a little too heavy with slow playing break even here. Same idea. So I'm guessing this was a loss. I mean, this is a huge gap. Now, this is a nice consolidation and a data high, but I don't know. I like to see more structure form sometimes. Not saying this was terrible. This was, I mean, it looks decent, but like I said, for me, I like to see those trades with those low resistance highs, or if it's gonna have a giant void like this, I need to have a really, really good consolidation, so it's super, super obvious we're gonna go back there. But I still think that this was good or fine. I don't know. To be honest, just you guys let me know what you guys think about that, and then, yeah, that about covers it for today. So yeah, guys, I'm locked in. Like I said, I'm gonna keep making these every single day, and yeah, let's just keep going. Let's keep grinding. I will see you guys in the next one. If you made it to the end, let's see. No one's probably watching, but if you made it to the end, comment IFVG. So yeah, inverse for value gap. I will see you guys later. See you next time. Bye.